Welcome to the Opportunity Podcast, where entrepreneurs come to learn from real buyers, sellers, and industry experts on the lesser-known growth opportunities to build their online business empires. We'll uncover tactics veteran online business entrepreneurs have used to build, buy, flip, and sell their way towards personal wealth. Sit back, grab a coffee, and get ready to uncover hidden growth secrets. The Opportunity Podcast starts now.
Welcome back to the Opportunity Podcast, your go-to resource for hidden growth opportunities throughout online business. For those familiar or new to the podcast, I'm Sarah, and thanks for joining me today. In this episode, we'll be talking to Leonardo Felisberto, the Global Head of Partnerships at SellersFunding, a financial platform designed to help e-commerce merchants grow and scale their businesses through effective financial management. Leonardo walks us through the benefits of applying for growth capital for your e-commerce business and how to apply for funding. He explains how to set up a practical cash flow system for your business and the common pitfalls to avoid when raising capital. Leonardo also provides some keen insights into how the e-commerce ecosystem has evolved and what up-and-coming trends are causing a stir in the industry. If you're tired of the financial strains of bootstrapping your business and want to know more about how to raise working capital, then this is the episode for you. Let's get started. Hey everyone, welcome back to the Opportunity Podcast. We're really excited to have today's guest on, Leo Felisberto. So Leo, how you doing today?
I'm doing really well. Thanks for having me on, Sarah. How are you?
I'm doing awesome. Just hanging out in Turkey. Where are you calling in from in the world?
I am in London, UK, so not too far from you. A couple hour flight away.
Yeah, I love how in Europe, or at least in and around Europe, that's so relative. It's like, yeah, that's close by. A couple hours, half a world away, it almost seems like, but that's cool. So I'm really excited to have you on. You know, we've gotten to talk a little bit before this podcast has gone live and gotten to know each other a little bit better. But for everybody else who hasn't gotten the chance to know you, walk me through, introduce me to who you are and how you got into the crazy world of online business.
Yeah, no, happy to. Absolutely. So as you'd mentioned, my name is Leonardo Felisberto. For those of you who don't know me, I go by Leo. A lot easier, less of a mouthful. I am the Global Head of Partnerships for SellersFunding, which is a digital financial platform for e-commerce businesses. So essentially what we do is we provide working capital solutions and global payment solutions to businesses that sell online across different marketplaces and platforms globally. So by way of background, I am actually originally from Brazil, if we're going to go that far back, but grew up in the US and spent most of my career in banking. So in the finance industry between New York and a couple of years in Geneva, Switzerland as well. And then about 2 years ago, the CEO and founder of SellersFunding, who was actually a former colleague of mine at JP Morgan, where we used to work together and cover Latin American markets. He had left the firm about 4 years ago, basically to start this company, had this vision, saw an opportunity in the market, and it had been going really well for about, 2 years in the US. And it reached an inflection point where he wanted to expand internationally, right? As I feel like most sellers probably get to that point in their business life cycle as well. And he reached out to me. I had just recently actually relocated to London with my wife. This is on account of my previous job at the time that relocated both myself and my wife. And he sold me on the dream. He's like, listen, I know you probably only know of Amazon via the stock analysis that you used to do on them, but there's so much more around this right now. And he kind of walked me through the business that he was building, which I thought was so fascinating. It was a new world to me, if I'm being honest. Again, e-commerce, I just know it as a consumer, but nothing other than that. But I just thought it was super interesting, kind of burnt out being 11 years plus in the finance banking industry, that same grind day over day. So I just kind of hopped along for the ride and I haven't looked back. It's been amazing.
Yeah, it's so funny to hear your story because I feel like so many people in traditional finance industry, they end up having that breaking point like you're talking about, and then they make this fantastic exit into a totally new world. Clearly, your new world was getting into more of this e-commerce realm, which is something I wanted to ask you about. Because I'm curious, you've kind of been in and around the industry and you're in a really special place in the industry today. But Granted, I want to know your take on this. Like, what do you think the evolution of e-commerce has looked like in the past couple of years? Has it changed since the pandemic? And have like the needs of e-commerce store owners really changed along with it?
Yeah, absolutely. I think a couple of things. It certainly has changed, right? I think year over year, we're always going to see a lot of change because it's such a fast-paced industry. But what the pandemic has done, as everyone knows, is it's fast-tracked just everything in the space, right? So you're seeing people that traditionally weren't online shoppers that now are online shoppers. So many more sellers coming to the space, right? Either by way of necessity or, opportunity, or traditional brick and mortar businesses that had to find another means to sell their products. So I think what we've seen in the space is obviously we're living in the golden era of e-commerce, right? And over the past couple of years, the biggest evolution I think that we've seen is the ecosystem around it, which we're a part of, right, Sarah? But it's so interesting to see, these new companies kind of, come to fruition and come to the surface to support this community. If you kind of take a look back at the seller ecosystem, as little as maybe 3 to 5 years ago. And there were probably, I'd venture to say less than half the number of companies that exist today to support sellers, which is very encouraging. And I think we're probably seeing, those types of businesses get added, on a daily, weekly, monthly basis, right? Just to support this fast growing industry that we're in. And in terms of, the pandemic, I think what that's triggered, like I had said earlier, is just a wave of people just kind of moving to the space, right? It's modern day gold rush, so to speak, where you have brand new sellers entering marketplaces for the first time, but also, as I had said, the traditional brick and mortar companies that, have been around for decades, and are worth hundreds of millions, if not more dollars, that needed to find a new channel. And that's where they've tapped into the online e-commerce space. So it's been a very exciting space to be in, to say the least, over the past couple of years, but especially in the past year or so.
Yeah, I love the way you just put that, because when I hear that, the first word that comes to mind is almost like mini revolution. And we know it's a revolution in how people shop and how business owners or retailers meet the needs of consumers. It's kind of a two-way street. And one thing that really stuck out to me in what you just said, you were talking about there's been this rise of businesses out there to support sellers. And of course, I know that is within the realm of what you're doing now. And I wanted to talk to you about it because, we talk about, let's say, getting, funding for your businesses. One thing that we always see with sellers on our marketplace in particular is historically there was this kind of inability to get funding for your business in the online realm, whether you are somebody looking to purchase a content business or somebody looking to fund your e-com business. Now, it's becoming easier than ever. But talk to me about, historically, what were the funding options available to e-commerce sellers, and maybe what were some of the obstacles in their way?
You're absolutely right. And I would venture to say that was probably the number one obstacle that a lot of online businesses were faced with kind of earlier on in their life cycle, especially a couple of years back. Because traditionally, when you think of, funding options, lending for small, medium-sized businesses, right, you think of banks. That's kind of been, I think, the oldest and the longest standing option that's been out there. The challenge with banks, and it continues to this day, is that they have a very archaic and dated underwriting model that hasn't really kept pace and evolved with, today's online business model. So they just don't understand it. That's first and foremost. And what that means is that, they're not going to be able to effectively or accurately underwrite the risks and the potential associated with these types of businesses, right? So lots of times banks may just steer clear, right? Unless you have a really good relationship with, a bank where you have a long-standing partnership with them, I think you're going to be hard-pressed to access capital in that way. And when businesses do access capital via traditional means, i.e. banks, it's also a very kind of drawn out and cumbersome process, right? I mean, I worked in banks for 10 years plus, so I know this firsthand, but, applying for a small, medium-sized business loan can take you anywhere from, a month on the short end to, a couple of months. And, in our world, that doesn't work because we need the capital yesterday, more likely than not, to submit a purchase order for inventory that's probably only going to hit your online shelves in about 3 months, where you're going to be able to see the sales proceeds come in from it, right? And so then more recently, maybe a couple of years back, you see the emergence of merchant cash advances, right? So that's where I think it's one of the first forms of revenue-based financing where you're basically paying a percentage of your revenue via the sales related to your credit and debit card. So via payment processor, well, they'll collect a percentage of your sales. So I think that was kind of the next step in the funding world. But you take a look at today, not only us SellersFunding, but all of our peers, we've been able to leverage technology to be able to provide sellers with very accurate and, more importantly, fast funding options to help them scale their businesses.
That's awesome. It's interesting to hear your background, and basically you're able to put yourself in the shoes of a seller in a way that maybe not everyone providing funding could, because you actually worked at banks. And as you walked me through that, it's funny, like the first thing that came to my mind was like, wow, I never really thought about what it'd be like, even if it's just a couple of years ago. I'm originally from Virginia. If I was an e-commerce seller and I have to go to the bank in Virginia, your typical run-of-the-mill bank, it's like, hi, I'm selling this product they don't understand on Amazon or Shopify, and just probably the look of complete confusion on their faces.
Exactly.
Maybe that's something you witnessed. I don't know. It's like you said, that slow movingness, the cumbersomeness of even just trying to get that funding. Like, I never really envisioned how frustrating that must be for so many online sellers who were stuck until you just said it in that way.
That's exactly right. And again, that's why I think our space specifically has done so well, right? Because there's definitely a need for it. There's demand for it. And I think we're kind of filling a gap that existed in the space for a long, long time.
100%. Well, I want to talk about that because so the way that you were setting that up, you're talking about sort of some of the touch points and when a seller might be seeking funding, what the obstacles are. But I think it's really amazing that you meet so many e-commerce entrepreneurs at just the very beginning of their journey. And, they come in, they've got all this energy, big dreams, and you have an idea of what they want their businesses to be. When most people are ready to seek funding, what do their businesses look like? And what do they need from you to venture into their next steps?
Actually, it's funny. We get this question a lot, right? And I think the way that we look at it and the advice that we give folks is, someone just starting a business, obviously capital is important at every stage of a business cycle, right? I think especially in the beginning, of course, when you're just trying to get things up and running off the ground. But this is where, and I think we're going to touch on this a little later, where a lot of folks bootstrap, right? So they leverage savings, credit cards, family and friends, whatever they can kind of gather and raise just to make that initial investment in the business. And I think that's part of the beauty of, the space that we're in e-commerce. It's the barriers to entry are very low, right? So with $5,000 in your pocket, you can essentially start an online business on a marketplace, right? And so what we recommend people just starting out is, learn the ropes first, right? So earn your stripes a little bit because it's such a big world and there's so much, for people to wrap their heads around, right? From kind of product development, rankings, marketing, logistics. There's just so much out there. And so I think start small, start steady is what we'd say, kind of get an understanding of what the business is like. And then I think once you've been through a few bumps in the road, you've earned your stripes a little bit, but you see that you have something that has potential and, you've built something that is now on, more solid footing or foundation. That's the time for you to explore taking on debt to accelerate growth in the business. So that's how we recommend, at least sellers initially, kind of how to approach this, right? Because if you're taking on a significant amount of debt just for startup, right, for a business that isn't proven yet and you don't know if it'll be successful or not, that's a huge burden on the entrepreneur themselves, right? So if they can bootstrap, you may take you a little longer to kind of get where you want to be, but you'll be in a much better position to then say, okay, now I'm ready to really accelerate the growth of my business by looking at, external funding.
Yeah, I mean, maybe you've just answered this, but it comes to mind, and it was something I want to talk about on this subject of, entrepreneurs, they're bootstrapping their business, they avoid taking out loans. If someone listens to this and they're like, well, he's just saying I can start my business basically for $5,000 and I could do all these other things. Why would I go out and get that working capital? Especially because, a lot of people, they think, oh God, getting loans and capital, that's scary. That's going to I'm selling my soul to somebody that I don't know out there controlling the money. So yeah, I was just wondering, what is the argument for that to say, yeah, okay, you can bootstrap, but you're missing out?
Yeah, no, totally. And so there is an inflection point. But to your point, It is. I think education is a huge part of it, right? So I think so many people just need to be better educated on what it means to take on debt. Because I like to say there's smart debt, there's good debt and bad debt, right? So the good debt to me is debt that you're taking on that has intention, that has purpose, right? So I'm taking on X amount of dollars to buy inventory that for a proven product, or to increase marketing spend on a product that already has shown promise and has demand, right? Or whatever the case may be, but there's intention behind it, right? It's not for the sake of taking capital, or, it's kind of wishing on a star, or I need to save a failing business and I need cash flow, right? So I think that's the first thing that sellers need to assess, right? So what is the purpose of the capital that I'm taking on, the debt that I'm incurring? And then in terms of going back to the inflection statement that I'd made, is I think, sure, you'll be able to bootstrap up to a certain extent, right? But then once again, you have a proven product, you have a working business model in place, you're only going to grow as quickly as your profit margin, right? If you think that that's the money, your bottom line is what you're reinvesting in the business, again, whether it be for R&D, additional inventory, marketing, personnel, you're only going to grow as quickly as the money that you have available to reinvest in the business, right? And so this is where leverage can be very powerful in accelerating that path to growth. So by using modest leverage, you're able to borrow money and invest that in a business so that you can take, again, it also comes down, Sarah, I would say, to risk appetite to a certain extent, right? So some people are just completely risk averse and they'd rather just kind of take the long road, and that's completely understandable. But, if you do have tolerance for a little bit more risk, calculated risk, right, where you're making educated choices in your business, leverage makes a lot of sense. It just can significantly speed up the rate of growth of your business.
Yeah, what you said about basically sellers needing to be educated on, kinds of debt, what stuck in my mind was thinking, yeah, I mean, that's really hits home. I mean, you think about our generation, there's enough people that are in debt in different ways, and in debt to, maybe their education or certain things that aren't basically attached to something that's going to give them immediate returns. The way you were talking about how that debt could actually fund your, your cash flow and your business and all of these things. Like, I think we're so paralyzed by this idea of that debt that I took on my whole life has been so bad, and then I'm about to go take debt on in this business. Like, ooh, I don't know about that one. But no, I think you've made a really solid argument as to obviously why this matters and why this debt is going to look and feel differently in this context. I'm wondering for the people who are listening to this and they're like, okay, I hear you. There's a lot of benefits to this, but what are you looking for? So talk to me about what criteria you're looking for in a seller or a business in order to approve them for funding.
Yeah, for us personally, again, and the end goal mission here is to help these businesses that we work with, right? So we see ourselves as a growth partner, as corny as that may sound, but being just completely transparent, it doesn't do anyone any good, right? If we're offering funding to a business that we know that they can't sustain or support, and they're in trouble 6 months down the road, right? Now they have a business that they're struggling with, and potentially they're not making payments to us. So no one wins, right? So our goal is to set our seller partners up for success. And so with that in mind, we have a very low barrier to entry. Its minimum requirements are at least 6 months of trading history, which isn't a lot. Again, just enough to kind of get these businesses up and running and growing, so that there's kind of proof of concept there, right? And then over that period of time, we do require at least an average monthly turnover of $20,000 a month, which equates to approximately $250,000 annual turnover a year. Other than that, I mean, honestly, it's just as long as they're an entity, and this is just for regulatory reasons, we're not able to lend to sole traders or sole props. Depending on the jurisdiction, they may be looked at as consumer lending, which is not the business that we're in. And as of right now, the jurisdictions that we operate in are in the US, Canada, UK, parts of Australia in certain instances. Basically, if a business is domiciled in Australia but selling outside of Australia, we're able to support them. And again, this is also for regulatory reasons. And then on a case-by-case basis in continental Europe, although we'll be fully operational in Europe by Q2 of next year, 2022.
Okay, awesome. I mean, it's exciting to hear that there is that low barrier to entry and that this is available to those, as long as they're hitting some of those marks you're talking about, but it's available to those who might be a little bit early in their trajectory and probably need the capital most. I'm curious, what would you say are some of the common traps that business owners fall into when it comes to raising capital for their business?
I think it goes back to education, right? That we were talking about before. So the number one issue that we see sellers kind of run into is not having a clear understanding of the terms that they're getting into, right? Whenever they seek out capital. Because we kind of throw that word around capital. It comes in all shapes and sizes, right? From equity capital that we know, where you're giving up a stake in your company, an equity stake in your company, to venture debt, to revenue-based financing, which is kind of the most popular type of funding in our space these days. But I think what's most important is to understand precisely what you're paying for or what you're giving up in your business. And so when it comes to the area that we're in, which is non-dilutive capital, so it's kind of more traditional lending, it's understanding the exact terms, right? So understanding the tenor. So what's kind of the payback period for me? What is the rate that I'm actually paying? So the true rate, right? Because I think you may see a discount fee or a flat fee, but what is the annualized percentage rate associated with that fee? So those are, I think, the most common traps that we see kind of today in the space. Unfortunately, it doesn't have as much transparency as it should. So what I would advise sellers is just ask questions, just keep asking questions. So, how long the term is, what is the annualized rate, and, what are covenants associated with the debt, if there are kind of any equity kickers around it. So I'm happy to kind of send a list of common questions that they should ask. But I think that's the number one thing, is just understanding what you're getting into.
Yeah. Oh, I mean, I can't echo that sentiment enough. I mean, it goes back to the earlier point on the importance of education, but I think it was what I was saying about why people are afraid. They're already indebted in so many different ways, and they probably already signed a bunch of loans. They didn't quite understand the terms. And, like you said, yeah, there's a lot of funding now becoming available in the industry, but it's not always transparent. And so it is so crucial to be able to ask those right questions. And I'm glad that you just went through, what some of those common pitfalls might be. I think it's just so key for people, especially if they're trying to reshape the narrative of what good debt looks like. You've got to be informed to make sure that it does continue to be good, like you were saying.
Absolutely. No, I'd say that's kind of, 75% of our job is just education and, making sure that the sellers that we work with, there's full transparency coming from our end and they know exactly what they're getting into.
Absolutely. Okay, so maybe this is switching gears. I'm not quite sure, but we're talking a lot about capital and getting, sort of a capital injection to a business. But I think the other side of that is really navigating cash flow correctly and making sure you're not spinning your wheels and burning through a lot of money in a way that's not working for your business. So walk me through, for businesses, say they're just starting out, what are the first steps they should take to set up an effective cash flow system?
Yeah, of course. And I think it all starts with understanding your P&L. Right. So that's what I would say. So know the key drivers of your cost structure. And that goes for any business, right? A business that is just starting out to, a business that is doing, 7-8 figures plus annually. What I mean by that is, understanding what goes into your budgeting or expenses of your business, from inventory to personnel, marketplace fees, marketing, logistics, et cetera. The list goes on, and tying that to your forecasted revenue stream. At the end of the day, the main goal, I think, in order to create an effective cash flow system is being able to effectively or adequately manage your inflows and your outflows, right? And being able, a moment's time to adapt if needed, right? So having levers that you can pull if, let's say that you have inventory for a period of 3 months that sells out in a month and a half. Right. So now what are you going to do for that next month and a half? Do you have to place a new purchase order? Do you have cash flow for that? How do you match the timing around that? Right. And I think the better that you understand your P&L and the cost structure of your business, you're better able to track how that can match the revenue or inflows that's coming in from those sales. And that'll allow you to, when needed, seek funding to be able to manage those inflows and outflows.
Awesome. Well, okay. So taking that a step further, does that strategy evolve for businesses that have grown to, say, 7 figures in size?
I think the principles at the core remain the same. You're dealing with bigger numbers and additional variables, right? That maybe businesses just starting out aren't dealing with. And then again, this goes back to where having your options ready for flexible capital can make all the difference, especially when you're dealing in size. right? And then I think the competition is certainly a lot more fierce as well. So you have to be in a position to act swiftly and nimbly. Just an example of this is where having a good relationship with a capital provider that has a standing credit line available to you is so important, right? So it's there and ready for you to use when you need it. So again, as kind of more variables get thrown your way, especially for businesses that, are larger in size, it's very important to kind of have those levers readily available for you.
100%. As you talk about that, and we're talking about, the fundamentals of, what is going to make a good cash flow strategy for businesses of all these different sizes. I'm curious, like we were saying earlier, we know that the industry has changed a lot over the years, but have you had to change your investment advice, say change to those fundamentals like we were talking about? Or, has more or less investment planning for businesses stayed the same?
So I think they've more or less stayed the same. If anything, I think they've improved. The data and insights around all of this has improved, so it's made it a lot more efficient. From our perspective, let's say our underwriting perspective, right? Or when we're evaluating a business for funding to see whether, we'd be a good fit for them, a good partner for them, there are so many more tools and so much more information at our disposal today than there was even, 2 years ago. As we had said earlier, all of these new businesses kind of coming into play to support this ecosystem that we have. With it comes, a lot of new information, a lot of new technology that's to the benefit of everyone, right? So for us, it helps with analytics. It helps us make a more accurate determination of, the credit quality of a business, the potential of a business, and how we're able to support them. And so I think that's kind of, if nothing else, it's, fundamentals have just improved and gotten better with the new technology and all of these new kind of service providers that have been popping up in the space.
No, I think that's such a good point, especially when you're talking about just the data and everything becoming so much more sophisticated. Like e-commerce doesn't look like what it did 2 years ago, and 2 years from now, it's not going to look the same. And 5 years from now, it could look vastly different. And there's an element of having to stay on your toes some. Now, I'm curious, like for people listening to this and they're hearing all the logistics of, getting funding and, what you need to know, I think it might be easy to get caught up and be like, oh, I don't know. It still sounds like a lot of work, or I'm not sold yet. So I'm curious, talk to me about real world examples of the impact you've witnessed growth capital to have on scaling e-commerce businesses. Because I do think that would be kind of the ultimate selling point for people, right? Like, what is the ROI? What's the transformation that you've been able to kind of witness in your sellers?
Yeah, of course. And again, at the end of the day, it all comes down to numbers, right? And how effective is this, and does it make sense for my business? I'm sure that's the question that everyone is asking themselves. So just to kind of throw out some quick stats on that point. So the average Amazon seller year over year growth is about 8.9%, right? So this is across the entire universe. The average SellersFunding client, so sellers that work with us, has year over year growth of 20%. With our top users experiencing year over year growth of 159%. So again, there's tremendous amount of value there. And it's really, like we've been saying all along, it comes down to cash flow, right? So being able to effectively manage your cash flow, match the inflows with outflows, and just having resources available to you when you need it in order to, improve efficiencies in cash flow. So there's the cash flow component, and then there's the actual leverage component too, as I had said earlier. So being able to accelerate growth using leverage for your business. So, we've done countless kind of projections and income statements of businesses where even using modest leverage of, call it 1 time of what their invested or what their expense would be on inventory, increases the ROI potential on that specific inventory, of 150 to 200%. That's including the cost associated, with the interest charge that you'd be paying. So again, most important thing is running through the numbers, right? And making sure you have a clear understanding of it and it makes sense for what you're looking to do. But the numbers are clear. There's tremendous amount of upside when you do it the right way.
Oh, it's fascinating. Like you said, numbers talk. And I think it goes back to a little bit tied into this idea of, you got to understand debt initially, and that there is this thing called good debt. There's a little bit of like having to work on yourself, I think, as a seller. It's like, not only do you have to shapeshift what you think about debt, but you also have to shapeshift how do you feel about investing in your business. And when you lay out those numbers and you start scaling up, and it's like our top users, you're saying like 159% or something like that in improvement. I mean, that's impressive. And it goes just beyond, making a ton more money each month. But when you start getting to the realm of being able to exit your business and, where we are at Empire Flippers and being able to sell, it's like all of that becomes a life-changing decision beyond the money you brought in every month. Now you've got this asset that you can exit for even more money, and it just kind of snowballs from there. But the starting point is really having to sit with yourself and be like, okay, I need to understand that when I invest in my business and when I go after this capital and when I have to keep reinvesting or managing my cash flow, that there's a reward in this. And maybe it's a delayed reward, the few years down, but as long as I get out of my own way first, I can probably reach that a whole lot easier, if that makes sense. Yeah, it's just so interesting to hear that. Like, there is a progression there, but it really does actually start taking and looking at yourself from like that first square and going, okay, I have to get out of my own way in so many of these other steps in order to go, yeah, if the cash is not all in my pocket now, that doesn't mean it's never going to be in my pocket.
Exactly. And there's a compounding effect to that too, right, Sarah? It's not linear because your baseline is increasing. You're absolutely right. So you may not see that ROI maybe in a couple of months, but if you kind of stick with it, I think the returns are significant kind of on the back end of that.
Absolutely. I mean, you've given a lot of advice through this whole episode, and I don't want to make you repeat too much, but I guess just for safe measure, would you say that there's like one key piece of advice that you think is critical for e-com sellers to know when they seek out funding?
Yeah, I would say going back to intent, what I would do is compare the project ROI with the cost of capital for that project. I know it's oversimplifying it, but just make sure that number is positive, right? So whatever you think the projected ROI is an investment that you're making in your business, whatever that may be. And if you're using external funding to make that investment, just make sure that whatever the true cost of that capital is, right, that you're taking on is lower than what you project the ROI of that investment to be. As long as you're doing that, you're in good shape.
Awesome. I mean, I hate having to make you go, tell me more advice. I know you've told me more advice, but I need all of the advice. No, I think it's good. Like we said, this is an incredibly important decision, can be a life-changing decision that compounds so much more for yourself and your business. So It's worthwhile hitting all those points home.
Yeah, no, I can be here all day. No worries.
Ooh, you may regret that. No, I'm just kidding. Well, actually, I did want to switch gears a little bit. I wanted to ask you a few personal questions. Just hearing your story, and you've been through all these different roles, and you've now landed into the world of e-commerce. From where you'd come from to where you are today, I was wondering, what is it about the e-commerce model that just really resonates with you and feels fulfilling to be in this industry?
I mean, it's such an exciting and fascinating space, right? It kind of always has been, but I think now more than ever, right? As we had said, I mean, I think we're really living in the golden era of e-commerce. I think one of the cool things about it too is just that, it allows, for any entrepreneur, to be a successful business owner in a very short amount of time, right? And kind of you'd be hard pressed to kind of, point any other industry where that's the case. And you have people from all walks of life. So every day I'm meeting new and interesting people that have, such incredible backgrounds, such incredible stories as to how they started and, how they got their business to where it is today. 7, 8+ figure businesses. It's amazing. $1 million businesses. So I think that just excites me every day, just, when I log in and when I do my job. And then just kind of going a little further in e-commerce, I think one of the other things that, is really interesting to me is the international kind of borderless component too, right? So when you think about a brick and mortar, just a normal retail business, right? In middle America, wherever they may be, like the thought that, they're also selling their product in Italy, in the UK, in France, in Asia, Australia, right? Traditionally sounds so foreign, but within reach. And there are a lot of businesses that do that via e-commerce. And I just find that to be remarkable. I think that it's super cool and super exciting space that we're in right now.
I love that point, making the world so much smaller and being able to have those international links. That's fantastic. Like you said, you were saying you kind of get to look behind the scenes of so many different online businesses. I was wondering, is there anything that's really exciting business owners right now? Or, would you say, is there like a common trend in terms of what owners are raising growth capital to fund?
Yeah, I've heard this thing called aggregators that I think is generating a little bit of buzz.
Never heard of them.
Yeah, I don't know.
Interesting.
I
Tell
don't know.
me.
I don't know if you've crossed paths with that or not. But
Never.
so obviously, I think that withstanding, which we're all very familiar with, some of the kind of insights that we're picking up from our clients on a day-to-day basis. And again, this is just compared to even a year or 2 years ago. I would say when I first joined SellersFunding, I don't want to get the numbers wrong, but a minority of our clients were doing cross-border, especially US-based clients, let's say, right? Because I think in Europe, it's a little bit more common, right? So UK, across continental Europe, it's just a lot easier to do. But in the US specifically, it was a minority of our clients. But that number has probably doubled, if not tripled, I would say, in the past year or two. So international expansion is a huge one. I think that there's so many more clients because there's just, like I'd said before, the access to it is so easy, right? The resources are readily available. There's service providers that offer that support for a business to just pick a country and start selling in a very short amount of time, just opening up a whole new channel, a whole new market for their business, for their product. So I think that's a super interesting one. And kind of along those lines as well is we're also seeing in the data too is diversification. So sellers that used to maybe just be on one marketplace or one platform now being on multiple, right? So omni-channel, increasing their touch points with clients. I think especially the feedback that we're getting is marketplace sellers, Amazon sellers that continue to do really well on Amazon, then want to actually own a portion of their clients. So looking to go, direct to consumer as well. So those are some of the patterns that I think we've seen emerging over the past year or so.
Awesome. Yeah, it's so exciting to hear about, like you said. I mean, just so much potential on the horizon, so much energy is happening right now. I'm sure like your head has to be spinning some days. I mean, I think it feels that way on our end sometimes. But no, I mean, this has been really great to hear your perspective on what's available for sellers when it comes to funding. It's sort of demysticizing all the kinds of sort of myths around finding funding, making sure you'll be able to work with yourself, not getting in your own way when it comes to finding funding. I've loved it. So thank you. I just had like a couple short rapid fire questions if you're cool with that.
Yeah, shoot.
To
of course.
close things out. Cool.
Let's do it.
So this one's a fun one. I like this one. What tools or resources would help online business owners when applying for funding?
Me, Leo from SellersFunding. That's one.
Number one tool.
Yeah.
There you go.
If you guys have any questions, please feel free to reach out. Leonardo@SellersFunding.com. Honestly, I think that's another thing that our peers in our space has done a pretty good job at. Just put out different insight pieces to better educate, as we were saying, right? Such a critical part of this kind of life journey of sellers on financing. So I think there are a lot of really good blogs that I've seen out there. So again, don't want to kind of list all of them out here on this podcast, but if, happy to kind of circulate a list either to you, Sarah, or, folks want to reach out directly to me. I think that's number one, just to kind of get a 101, right, on funding and what that process looks like. And then a good bookkeeper, honestly. So I think bookkeeping is so important. And again, it ties back to properly managing your cash flow, understanding your P&L, your financial statements, right, all of that. Having a good bookkeeper that's managing all of that for you and that, is educating you along the way, I think is of utmost importance. And it makes our lives a lot easier too, when we're evaluating a business that we, potentially may fund, just knowing that their books are in order. Don't get me wrong, I'm an Excel junkie myself, so I don't mind Excel spreadsheets, but I know maybe some of our other credit guys may appreciate a good bookkeeper as well.
Oh, yeah. I think that's great advice. I mean, one, when you're mentioning all the resources, happy to link to any of that in the show notes too. As you're describing why you would need that bookkeeper, I'm like, oh, yeah. I mean, I'm not an Excel junkie, so I would be quick to spring for a bookkeeper if I was in the seller's shoes. So it's great advice. Thank you. Finally, maybe the hardest question of the interview. What's been your funniest moment working in the funding industry?
All right. So yeah, I've had to put a little bit of thought into this. This was a tricky one, but here goes. So this actually, we just completed our first capital raise a couple of months ago now, and very excited about that. Our largest kind of institutional investor, the VC that took lead on that raise, is London based, right? And so October 31st, my wife and I and our son, our 18-month-old son, we took him out trick-or-treating. And you may know this, Sarah, having lived in the UK before, but it's not that big of a thing here, Halloween, right? It's catching on. They're getting better at it year over year, but it's nothing like the US. And so my wife and I were walking around Chelsea, which is actually kind of a posh neighborhood in London, around 5 p.m., dressed as penguins. So we're a penguin family. I'm a 6-foot penguin walking around. No one is in costume, right? And we're like, whatever. Like, our son's loving it, right? He's having so much fun. Little baby penguin. And of all people, who do I run into is our lead investor. And he just looks at me, and he didn't recognize me at first. So he's like, who's this giant penguin just staring at me? And he's like, Leo? So he got to see the penguin side of me, I like to say. And I told our CEO that, and we all had a good chuckle at that. So,
I mean, it would have been perfect if you had rocked up to his house and, clearly for trick-or-treating, you're meant to ask like for your treat or whatever. And you just be like, can I have funding?
Exactly. Yeah. Could have just gone in for a penguin hug.
That's so funny.
Yeah.
Yeah. It's one of those things like you forget the rest of the world isn't quite caught on to what is arguably one of the best holidays. I think everyone should catch on to Halloween.
Agree.
I mean, if you can walk around a place like a penguin, like why would you not have this holiday?
Do it every day of the year. Yeah.
I'm down for that. No, that's hilarious. I love that. It's like, what are the odds?
Yeah, exactly.
But that's how life goes.
That's right.
If you decide to walk around London like a penguin, you are going to see somebody you know.
That's exactly right. Yeah, and you got to have some fun with it too, right? You got to keep it light, not take yourself too seriously. So
exactly. That's amazing.
Yeah.
Very cool. I really enjoyed that story. Well, this has been awesome, Leo. It's been great to hear your side of things and see what is out there for sellers and what their businesses could look like when they get the right funding in hand. So thank you so much for walking our audience through that today.
Yeah, it's been my pleasure. No, I've had a lot of fun chatting with you today, Sarah. So really appreciate you having me on.
Yeah, always. Good to have you on. Thank you.
All right. Thank you. Bye, everyone.
Hey everyone, thanks for tuning in. I hope you've walked away with a bit of new insight that'll help you in your digital entrepreneurship journey. If you enjoyed this episode and you'd like to help support the podcast, please share it with others, post about it on social media, or leave a rating and review. To learn more about businesses available for sale at Empire Flippers, click the link in the description or visit empireflippers.com/marketplace. Thanks again, and I'll see you next time.